after we've prepared the income statement, we're going to go on to lesson 2, which is preparing the statement of stockholders' equity. A financial statement that shows changes in a corporation's ownership for a fiscal period is your statement of stockholders' equity. Information needed to prepare it comes from several sources. The current year's income summarizes the changes in retained earnings from the operation of the business. So we will use this information here. The beginning balance right here of capital stock we will be using from our general ledger. And then the current balances of all our other capital stock information comes from our adjusted trial balance. There are 2 sections of our statement of stockholders' equity. We have a capital stock and we have our retained earnings. The value assigned to a share of stock or share of stock and printed on the stock certificate is a par value. Each share of stock issued by a corporation has a monetary value. When issuing shares of stock, a corporation can assign any par value allowed by law in the state in which it's incorporated. So when we take a look at our statement of stockholders' equity, the top part deals with our capital stock. We put the heading, we write our capital stock section, and again, that is just the heading for our section. We have our stock at the beginning of the year. Okay, we can see that each share of stock was $10 par value. At the beginning, January 1st, we issued 7,000 shares. So we take 10,000 times 7,000 and we get 70,000. Then we're going to include any additional stock issued throughout the year. And then we'll have the total stock issued. And again, you can see that this is 7,000 shares. This is 500 shares. Each of them is worth 10,000. So our total at the end is 75,000 in capital stock. Our second section is the retained earnings section. And you can see it right down here. It's a little blurry, but that's as good as I could get it. Okay, so in this section, we're going to have the heading, retained earnings. We put our beginning balance of retained earnings. And again, that comes from our general ledger. Net income after federal income tax, we will include that. And remember that we just figured out on our income statement. Then our dividends declared, we're going to find out how many dividends were declared. So we have to go back into our general ledger and get that. Increase in retained earnings. So we'll take this amount minus that amount, and we'll find out how much we increased in our retained earnings, because remember, we made some money, we declared some dividends, so the difference between that will go there. We'll come up with our ending balance. This, our beginning balance, plus an increase will be our ending balance. When we add our capital stock plus our retained earnings, we will come up with our total stockholders' equity. And this again is the way it looks. This will be your statement of stockholders' equity.